What if one small country in Southeast Asia suddenly falls apart, dragging down giants like the United States and China? Today, we're ranking the top 10 countries that could face total economic collapse if Cambodia's economy crashes. From lost jobs in factories to broken supply chains and billions in vanished trade, the shockwaves would be huge. We'll count down from number 10 to the biggest at number 1. Stick around till the end to see who tops the list. You won't believe it. If you love eye-opening facts like this, hit that like button, subscribe for more global what-ifs, and drop your thoughts in the comments. Share with a friend who loves economics. Let's dive in. Number 10. Laos. Cambodia's quiet neighbor feels the crash hard. Sharing Mekong River routes, Laos sends rice and machine parts, earning millions yearly. Cambodia's collapse halts this trade, leaving Laos's farmers with rotting crops and truckers with no loads. Small towns along the border, like Savannakhet, see shops close as money dries up. Laos already struggles with heavy debts to China. Losing Cambodia's cash makes it worse. Factories pause, workers walk away, and families skip meals. The government, stretched thin, can't cover losses or pay loans, risking default. Cross-border markets, once buzzing, turn silent, and Mekong fish sales drop as routes clog. Tourism, a lifeline, slows as Cambodia's chaos scares visitors away. This domino effect shows how tightly knit neighbors are. One falls, the other stumbles. Laos's tiny economy can't absorb the shock, pushing it toward poverty's edge. It's a stark lesson. Even small trade links hold big weight. When Cambodia sneezes, Laos catches a cold it can't shake off easily. Number 9. Myanmar. Myanmar, tied to Cambodia through ASEAN trade, faces a brutal hit. Cambodia buys Myanmar's cotton and rice, fueling millions in exports. A crash stops these orders, idling textile mills in Mandalay. Workers lose jobs, sparking protests in crowded cities already torn by unrest. Myanmar's ports, like Yangon, grind to a halt, delaying rice shipments and aid. Cambodia's factories, stitching clothes with Myanmar's raw materials, shut down, cutting trade by 25%. Rural families barely scraping by face hunger as farm incomes vanish. With floods and internal fights, Myanmar's fragile economy can't take this blow. Border trade posts close, stranding goods and spiking prices. Smuggling rises, adding chaos. Cambodia's fall pulls Myanmar into a deeper hole, where recovery feels impossible. This ripple proves no nation is an island. Shared markets mean shared pain. Myanmar's dreams of growth fade as Cambodia's collapse drags it down, leaving workers and farmers to bear the cost of a broken regional chain. Number 8. Philippines. Linked by oceans and workers, reels from Cambodia's crash. Over 120,000 Filipinos work in Cambodia's hotels, casinos, and shops, sending home $250 million yearly. These remittances feed families, pay school fees, and build homes. A collapse wipes out those jobs, cutting cash flows overnight. Villages in Luzon and Visayas face empty pantries, forcing families into debt for rice and medicine. The Philippines' economy, leaning on overseas workers, sees growth stall as money stops flowing. Tourism takes a hit too. Fewer flights to Cambodia mean empty resorts in Cebu. Trade in electronics, worth millions, slows as Cambodian orders vanish. Manila's markets feel the pinch, with prices creeping up. The government scrambles to support jobless returnees, straining budgets. This hidden link, workers abroad, shows how one nation's fall shakes another. The Philippines, despite its size, can't escape the chaos. Cambodia's crash proves even distant ties can snap, leaving families and markets struggling to recover from the shock. Number 7. Indonesia. ASEAN's giant feels Cambodia's crash like a tremor. It sends machinery, oil, and food to Cambodia, with trade worth $2 billion yearly. When Cambodia collapses, orders vanish, leaving Jakarta's ports quiet. Factories in Surabaya cut shifts, laying off thousands who make parts for Cambodian plants. Indonesia's farmers, supplying rice, see crops unsold, hitting rural incomes. Tourism, a big earner, dips as Cambodia's chaos scares travelers away from the region. Indonesia's own struggles, poverty, and debt make this loss sting more. Shipping lanes slow, clogging goods bound for Asia. The government, already juggling inequality, faces pressure to aid jobless workers, but funds are tight. ASEAN meetings stall, delaying regional fixes. This shows how one small nation's fall ripples to bigger ones. Indonesia's growth, once steady, wobbles as Cambodia's markets close. It's a wake-up call. Even giants lean on smaller neighbors. When Cambodia falls, Indonesia's economy shakes, proving no country stands alone in this connected world. Number 6. Hong Kong. Asia's finance hub takes a hit when Cambodia crashes. It pours millions into Cambodia's airlines, hotels, and real estate, expecting steady returns. A collapse freezes these investments. New resorts stall and deals worth $500 million crumble. Hong Kong's banks, holding Cambodian loans, face defaults, shaking investor trust. Stocks dip, and firms like Cathay Pacific cut routes as tourism slows. Cambodia's garment trade, funneled through Hong Kong's ports, stops, idling warehouses and slashing logistics jobs. The city's economy, already tense from China's shadow, feels the squeeze as trade drops 15%. Small businesses, tied to Cambodian suppliers, scramble for new markets, but find none fast. Confidence wanes, loans tighten, and property deals pause. This shows how far money travels. One nation's fall hits a distant hub. Hong Kong's shiny skyline hides a truth. Even rich cities rely on small partners. Cambodia's crash proves those ties, when broken, can send shockwaves through global finance. Number 5. Singapore. A gleaming trade hub stumbles when Cambodia's economy crashes. It invests heavily in Cambodia's farms and tech, with $1 billion in yearly trade. Training programs for Cambodian workers, run by Singapore, halt, wasting millions. Exports of electronics and food pile up, clogging Singapore's world-class ports. Jobs and logistics vanish, hitting workers who load ships. Cambodia's garment factories, buying Singapore's tech, shut down, cutting trade by 20%. Tourism dips as regional fear keeps visitors away. Singapore's economy, built on trust and speed, slows as investors pull back. The government scrambles to plug gaps, but ASEAN's unity frays, delaying fixes. Small businesses, linked to Cambodian markets, face losses. This ripple shows how even a tiny nation's fall shakes a giant. Singapore's clean streets hide a truth. No hub is immune. Cambodia's collapse sends shockwaves through ports and banks, proving that in Asia's tight web, one weak link can drag down a titan like Singapore. Number 4. Japan, a global powerhouse, reels from Cambodia's crash. It pumps $1.5 billion into Cambodia's roads, bridges, and factories, expecting steady returns. When Cambodia collapses, loan repayments stop hitting Tokyo's banks. Exports of cars and tools worth millions vanish as Cambodian plants close. Factories in Osaka lay off workers, adding to Japan's aging workforce woes. Aid programs like building schools stall, wasting funds. Japanese brands lose markets for bikes and electronics, cutting profits. Cambodia's garment trade, using Japanese machines, grinds to a halt, idling suppliers. Japan's slow economy can't absorb this shock. Stock markets dip, and consumer prices rise. Tourism to Cambodia, a growing niche, fades, hurting airlines. This shows how far aid and trade stretch. One small nation's fall hits a giant. Japan's recovery is slow, with debt piling up. Cambodia's crash proves even distant ties matter. From Tokyo's towers to rural plants, the ripple of one collapse shakes Japan's economic core. Number 3. Vietnam, Cambodia's close neighbor, faces chaos when Cambodia crashes. Sharing Mekong River trade, Vietnam sends rice and fabrics worth $3 billion yearly. A collapse stops these sales, idling factories in Hanoi. Cambodian garment plants, using Vietnamese cotton, shut, cutting jobs for thousands. Refugees flood Vietnam's borders, straining food and water supplies. Markets in Ho Chi Minh City see prices spike as trade routes clog. Vietnam's growth, tied to stable neighbors, stalls, unemployment rises, sparking protests in rural deltas. Water disputes over the Mekong worsen without talks, threatening fish stocks. Small businesses, selling to Cambodia, face bankruptcy. The government, already battling inflation, struggles to aid displaced workers. This ripple shows how tight bonds break fast. One nation's fall pulls another down. Vietnam's ports and farms slow, hurting families who need steady pay. Cambodia's crash proves neighbors share more than borders. They share survival. Vietnam learns the hard way. A friend's collapse can spark your own economic nightmare. Number 2. Thailand. Cambodia's bustling neighbor crumbles when Cambodia's economy tanks. With $5 billion in yearly trade, Thailand sends fuel, parts, and tourists across the border. A crash halts this flow, trucks idle at Phuket, gas sales drop, and 2 million tourists vanish. Thai factories, making clothes for Cambodian plants, stop, laying off thousands in Bangkok. Border towns turn quiet, shops close, and farmers lose markets for rice. Tourism, Thailand's cash cow, dries up as Cambodia's chaos scares visitors away. Hotels in Phuket and Chiang Mai empty, hurting small businesses. Thailand's own floods and debts make recovery tough. Prices rise, families cut back. ASEAN trade talks stall, delaying aid. This shows how one nation's fall ripples next door. Thailand's markets and ports, once thriving, slow to a crawl. Cambodia's crash proves close ties can backfire. Shared borders mean shared pain. Thailand's economy wobbles, reminding everyone, when a neighbor falls, you feel the ground shake too. Number 1. United States. The United States, Cambodia's top buyer, tops the list when Cambodia crashes. Importing $12 billion in clothes and shoes yearly, the U.S. relies on Cambodian factories. A collapse empties shelves in Walmart and Target, spiking prices. Brands like Nike lose billions, cutting retail jobs from California to New York. Supply chains, employing millions, stall. Ports in Los Angeles slow, and warehouses sit full. The U.S. dollar holds, but inflation hits families buying basics. Factories making zippers and fabric for Cambodia close, adding unemployment. Wall Street sees stocks dip as confidence wanes. Cambodia's small size hides its power. One crash ripples across oceans. American consumers face higher costs, and small businesses struggle. This proves no economy is an island, even a giant like the US. From shopping malls to boardrooms, the shock hits hard. Cambodia's fall shows how global trade binds us. One weak link can shake the world's biggest market, leaving families and firms reeling. Whew, that was wild. From Laos to the USA, Cambodia's fall shakes the globe. Thanks for watching and exploring these what-ifs with me. If this blew your mind, smash like, subscribe for more, and comment which country surprised you most. Share to spread the word. See you next time.